Hey everybody, I'm Michael Strahan, and St. Jude has been close to my heart for many years. Their groundbreaking research is changing how the world treats childhood cancer, and has helped push the survival rate in the U.S. from 20% to more than 80%. Please help St. Jude give children the greatest gift, a chance at a lifetime.
This holiday, help St. Jude find more cures for more children. Donate now at musicgives.org.
Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before my pal Randy Wang at 5 on the 790 KBC News Blitz. Right now, Mottek On Money, live on the air, 790 KBC, streaming live online worldwide at kbc.com. And, of course, the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Mixed finish for stocks today with Tesla hitting an all-time high. Silver and gold hovering near all-time highs. Platinum moving to a 14-year high. Oil sliding today. And another rough day for cryptos with Bitcoin getting down to around 85K. Right now hovering at around 87,000. The Dow coming in for a closing loss of 302 points. The S&P 500 down 16. The NASDAQ closing higher by 54 points. On the economy, looks like the economy shed 105,000 jobs in October, added 64,000 jobs in November, according to the delayed readings on the job picture released today by the government. The unemployment rate rose to 4.6% in the month of November, and that's the highest seen since September of 2021. Highest in more than 4 years, fueling questions about the economy's underlying strength. We'll talk about it. We'll talk about it later this hour with prominent Milken Institute economist Kevin KLOWDEN, executive director at the Milken Institute Finance based in Santa Monica. The latest jobs numbers, some of the most important numbers to be released since the government shutdown. Turns out the economy added 64,000 jobs last month, slightly ahead of analysts' expectations. And as I mentioned, the unemployment rate slightly overshot expectations at 4.6%, while a rate measuring underemployment also hit a 4-year high. How are tariffs impacting Main Street this holiday season? Retailers and consumers will find out later this hour in the front line out there with Tara RICEBERG, owner of Tesoro Gift Shop in Beverly Hills. The Federal Reserve will likely not be able to lower interest rates next year as the Republican tax bill passed last summer is likely to put upward pressure on inflation. That view from the Atlanta Fed president and former USC professor Raphael Bostic. Speaking today to reporters, he also published an essay on his regional bank's website. Raphael Bostic, who used to be a frequent guest on this program, by the way, back in the day, said he thought the economy was no longer in danger of a sharp rise in the unemployment rate that might spur a recession. In the business of show business here in Hollywood, Paramount Skydance is financing for its $108 billion bid for Warner Brothers Discovery, taking a hit today as President Trump's son-in-law Jared Kushner dropped out of the hostile takeover attempt for Warner Brothers Discovery. This coming as Warner Brothers Discovery's board is planning to advise shareholders to reject the Paramount Skydance offer and carry on with the Netflix deal that's already on the table. We see Warner Brothers Discovery stock pulling back nearly $1 today to 28 and change. Cannabis stocks lighting up today after President Trump said that he was very strongly weighing an executive order to reschedule cannabis, a move that would lift some restrictions on cannabis. Curaleaf Holdings and Trulieve Cannabis, which produce cannabis around the country, finished sharply higher today, and Canadian producer Tilray Brands got about a 28% pop, while rival Canopy Growth moved up about 10%. Joining us live now, the one and only Dr. J, as he's known on the major financial networks, John NAJARIAN, co-founder of Market Rebellion, crypto expert with the laser eyes on, options expert, and author with his brother Pete of the very popular book, It's Not an Option. John NAJARIAN, thank you very much for taking the call here this afternoon.
Always great to be with you, Frank. Thank you very much, sir.
Wonderful to have you with us here, John NAJARIAN. And take it from the top. It's been a while since we've chatted behind live microphones. Give us your view of this latest market action here.
Well, I think I was with Tom Lee and actually Anthony Pompliano, two prominent crypto guys in Miami this past week, where we were hosting at the 10X Wealth Conference out there. And I think both of them pretty much nailed it, that we are likely to see some of the same volatility in cryptos, in the digital assets, that we've come to now not enjoy I certainly don't enjoy it as
Yep.
much, but it's likely to be here for a little bit longer. But we're basically, I believe, and this is based on what they were saying too, pretty close to very significant bottoms in many of the cryptos right now. I know your question, Frank, was primarily about the stock market. I just wanted to get that one out there. Stock market in general, I think we're going to get reactions to whichever Kevin it is, Warsh or Hassett, for the likely filling of Jerome Powell's seat, perhaps even before May of next year. But of course, the term does not expire until May of next year for Jay Powell. So I think we're going to go back and forth as Polymarket and Kalshi are doing right now, as far as the odds of who the next Fed chair will be and how dovish, because obviously either of those two are very likely to be dovish and following what the president really would like to see, and I believe what many of us would like to see as far as interest rates. And right now the bond market is just saying, well, it's probably a little bit of basically churn between now and April, back and forth with those that are really, really sensitive to interest rates. And certainly cryptos are among those that are sensitive to interest rates, as is gold.
On there live with Dr. John NAJARIAN, and staying with the cryptos here for a moment. It's been a stomach churning move on the downside recently. And that's great that you were at that big conference with all the biggest players in the crypto world. So what's the buzz there? Where does Bitcoin go from here? It was around 85K today, right now just below 88 here at last check. And after having hit record highs earlier this year, not so long ago, obviously a lot of volatility. But have you adjusted your outlook on where Bitcoin goes from here?
Well, cryptos, of course, or digital assets have had downturns over the past several weeks, basically since the October highs when Bitcoin hit 126 and Ethereum was over 5,000 or ETH. Turns out both those gentlemen I mentioned, Tom Lee, he's the largest holder of Ethereum right now, even larger than Vitalik, the founder of Ethereum. I think he has $16 billion in Bitmine immersion tech. That's BMNR. And on the other hand, Anthony Pompliano, or Pomp, also very much committed to cryptos, but primary focus for him is really Bitcoin. And I think we're looking at the Fear and Greed Index for cryptos as something that indicates that we're not really thinking it goes a lot further than this. At least the panic is not there. I think the panic's already sort of taken hold. I mean, Ethereum is down from that high of the year over 5,000 down here now to 2,900 and change. And as you said, Bitcoin basically 87.5 to 88,000. And I think both of them just kind of bounce around until we get a little bit more clarity on the next move out of the Fed, which, by the way, is probably not, at least based on the betting sites and prediction markets, probably not January, but coming up soon after that.
All right, where's the options action in the crypto world? I see one report, traders selling put options at 85K, call options being sold at 100,000. Where are you placing your bets at the moment?
I would be right there with them. I think the market's been pretty firm between 83 and 90 for Bitcoin. And did we pierce down to 80,000? Yes, we did. But we came through it that same day back above 83. So piercing various key levels is never something that those of us who actively trade are afraid of. We sort of anticipate that as long as we get back above some of those key levels, which I said in my mind was 83,000 for Bitcoin, we have done that now. So being short puts at that level, 85,000, would probably give somebody somewhat comfort to probably about the same low that we hit just weeks ago of 80,000. So 80,000 to 100, yeah, I think we're likely to see us trade in that range, but probably if I wanted to tighten it up a little bit, I'd say 83 to 95.
All right, any of the meme coins getting your attention? Have they fallen out of favor now? What about some of the ancillary names besides Bitcoin and Ethereum?
Well, the liquidations and demand are those service attacks on networks, for instance, like Solana. That's something that we all sort of sit back, see it, and then hope that it didn't really do as much damage as the perpetrator intended. That does seem to be the case. We did see Ethereum get a pretty big endorsement out of JP Morgan, and were the cryptos a little more buoyant, I think Ethereum would have lifted fairly significantly on Wall Street's embrace of that, and or Visa, which basically jumped on the train with Circle. So CRCL, of course, another stable coin, and the fact that Visa, one of the largest credit card companies in the world, is going to be using those stable coin and the rails that they can ride on there to take down some of the costs. I think they're wise to do that now rather than waiting until other stable coins start to really eat into the profits of American Express, Discover, Visa, and MasterCard.
All right, from digital gold to analog gold and silver. I think the last time we spoke, silver was well below $50 an ounce. It blew past that to all-time highs, now around $64 an ounce. 1 ounce of silver is now worth more than a barrel of oil, which is trading at around $55 a barrel here at the moment. Give us your thoughts here on the record run-up we've seen for gold, which is hovering at around $43.30 here at the moment. Silver just below $64 an ounce, and platinum, by the way, close to $1,900 here at a 14-year high.
Yeah, well, silver is a clear outperformer in that group. As you say, basically hovering around that $50 mark and now exploding up here all the way to March silver, just as Frank said, folks, 63.96 right now, up another percent, and that's the March silver futures contract. SLV has similarly, that's the silver ETF, similarly had a nice rise over the past several weeks. Eased a little bit during the day today. It was down about 0.5%, but it seems to be retaking 58 for the SLV. Again, that's the silver ETF, not the futures or the price of silver, but rather of that ETF that tracks it. And I think gold will likely move between now and the end of the year in the same direction as silver. I won't be surprised to see either of them put on another 2 to 5% by the end of the year.
All right, what about oil? 55, we've got double nickels on the board here for oil.
Yeah, and that is something that, as Tommy Norris would say on Landman, or I guess actually it was John Hamm, his character on Landman, they would much rather see it $70 to $80. The fact that it's down here at 55 means a number of projects are likely to not get started at that level. We have record production in the United States. We passed an all-time record just last month in November for oil out of the ground in the United States. We're certainly keeping pressure on the crude oil contract by extracting as much as we are, both through shale and conventional. But that's a good thing for the airlines. It's a good thing for truckers. It's a good thing for shippers. It's a good thing for Joe and Jane at the pump. Everybody but where you are, Frank, where you guys are basically paying at least $2 a gallon more in Southern California than I think 33 states are under $3 right now. Yeah,
well, thanks for reminding me. Yep, you're absolutely right about that. And just look around at those gas price pumps, price signs here. It's unbelievable, but you're absolutely right about that. And What about Tesla at a record high today? And what about Elon Musk's plans to take SpaceX public here? Obviously, a lot of excitement about that.
Huge excitement about Musk taking SpaceX public next year at probably a valuation like none of us have ever seen before for an IPO, initial public offering. About $1.5 trillion. Obviously, Mr. Musk's still the largest shareholder there, as he is in Tesla. And that means that even without that $1 trillion pay package that he could get by 2030 with enough of the robo-taxi and self-driving car features able to lift that stock, TSLA, to these record highs that we've just seen, it's been a heck of a ride this year. Tesla has put just, if you pardon the pun, Frank, put the pedal to the metal. And into the close of the year, it's just a heartbeat away from $500 a share. It got down, I think, on the April lows to about $220 per share. So this is an absolute amazing run that the stock's been on, and now you kind of know what happens when Mr. Musk puts his mind to something.
All right, a lot of ground to cover here. What about these cannabis stocks that have taken a pop here on buzz that, if you pardon the expression, President Trump says he's strongly weighing an executive order to reschedule cannabis. This is something, of course, the cannabis business has been hoping for, getting the banking straightened out and all the other issues there. What about these names that suddenly are back in the spotlight?
Well, certainly cannabis has flourished, but the stocks have not. The fact that so many states have both medical and recreational marijuana now has been fantastic for sales, and it has not lifted the prices, though, of those stocks. Many of them were initially listed in Canada because they could not list in the United States because of that exact designation that the president is hoping to roll back. To me, I think it would still be sort of a fool's errand to buy these cannabis stocks, given that the price that they're for growing and or distributing has not been going up. The profitability of those companies has not been going up. That's not to say they shouldn't exist. Of course they should, but perhaps they were just priced way too high on the initial belief that people would do what they are doing now, and that is, in many young people's cases, choosing cannabis over liquor, over other recreational areas that they could go into. And yet the competition has just crushed the price per ounce or per gram of any of these to the point where I don't think any of those companies really can do anything more than be rolled up over time rather than surviving on their own.
All right, and another important question for you. A lot of talk recently about an AI bubble and all that, with NVIDIA hovering at around 177 now, and the Magnificent One pulling back, and some of the other tech names have come under pressure, although today the NASDAQ popped as Tesla hit a record high. What are your thoughts about the Mag 7 names, NVIDIA, and this concern about an AI bubble here?
Well, again, I think you and I did get a chance briefly a little bit ago to talk about what Dr. Michael Burry's thoughts were about both Palantir and NVIDIA. I believe his options expired before he could really cash in on the drop. He would be lucky to get that money back rather than to be the hero that he was back in 2008. So I think certainly Palantir, when I looked at it today, it bottomed PLTR, bottomed at about the 150-ish level not too terribly long ago, and then came roaring right back. So it was about 153 at the just before Thanksgiving. It's right back to 188 now. So as smart a guy as Dr. Michael Burry was there, or as smart as he was saying that the valuations of NVIDIA were likewise stretched, he was hard-pressed to make any of his investment back, let alone make money. And that's why I believe he had basically had to announce that he was closing that fund, his $125 million hedge fund, and perhaps moving on to other forms of trading rather than trying to pick tops in a really difficult market where, yes, valuations can be stretched, but many of the stocks corrected so significantly that it's not really in most of our best interest to try to imitate what Dr. Burry was doing.
All right, and briefly, John NAJARIAN, any specific places where you are putting money now and or taking it off the table?
Sure. What we saw over the last couple days really got us interested in Copart, CPRT. This is basically a site for selling cars. It's not really what you and I would use, Frank. It's more what dealers would use. And there was a lot of interest in that one by big institutions. And believe it or not, Tesla. They came back in and bought even more upside action in Tesla today. They've been right into the after hours. As you say, it traded up into the close to 489, a new high. And they're betting that it goes even higher by the 26th, which will be obviously the day after Christmas.
John, wish we had more time. We'll have to stop there. Thank you very much for taking the call and covering all of this with us here today. That is John NAJARIAN, Dr. J, as he's known in the major financial networks, co-founder of Market Rebellion, crypto expert, options expert too, and author with his brother Pete of the very popular book, It's Not an Option. We wish you and Pete and all your family and your whole team there, John, all the very best this holiday season. A Merry Christmas to you, and thank you very, very much for joining us live here this afternoon.
U.S. soccer. Reality says the odds are stacked against us. To think that our U.S. men's national team can ever raise the world's biggest trophy. But refusing to accept reality is kind of our thing. We chase greatness. We chase legacy. We never chase reality. Join U.S. Soccer Insiders today. Be part of the journey.
Hey there. I'm Paula Pant, host of the Afford Anything podcast. I help people make the smartest money decisions possible because let's face it, money's too important to wing it. From investing strategies to economic trends to savvy travel, lifestyle design, and beyond, we're in this journey to financial independence together. Remember, you can afford anything, just not everything. So, afford anything. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KBC. Good afternoon. The Dow down 302 points today at 48,114. S&P 500 down 16. The NASDAQ up 54 points as Tesla stock hit a record high today, moving up nearly $15 a share to $489.88. The yield in the 10-year note now 4.16%. Silver continues to hover at or near all-time highs at just below $64 an ounce. Gold at $4,334 and change. Platinum getting closer to $1,900 now at $1,870.60 an ounce. Meanwhile, the price of oil at $55.29 a barrel. Silver, an ounce of silver is now more valuable than a barrel of oil, with silver just below $64 a barrel, the price of an ounce, the price of oil at $55.29 a barrel. In the meantime, the Magnificent One, NVIDIA, moving higher today by $1.43 at $177 and change. Oracle up nearly $4 at $188.65. Warner Brothers Discovery shares pulling back 81 cents at $28.90. In the cryptos, we see Bitcoin hovering at around 87.8 at the moment. Ethereum just below 3,000. Doge at the moment at 13 cents. Mottek On Money continues here, 790 KBC. Some new readings on the economy out today, delayed because of the government shutdown. The longest ever. The unemployment rate, as it turns out, rose to 4.6% in the month of November. That's the highest in more than 4 years, fueling questions now about the underlying strength of the economy and where things should go here as far as the Fed is concerned on interest rates. Let's bring in the prominent Milken Institute economist Kevin KLOWDEN, executive director at Milken Institute Finance, based in Southern California in Santa Monica. Kevin KLOWDEN, thank you very much for coming to the line this afternoon.
My pleasure, Frank.
Finally, we got these numbers, these important numbers on jobs today. Give us your reaction to what we got here today and your assessment of the economy.
Well, the first thing that really comes to mind is the missing October numbers and the fact that we are looking at a real decline in jobs rather than job creation, although the initial November estimates are definitely better. The main thing that we're seeing, though, is that there's definitely not a robust job market, not robust job creation going on right now. And that obviously is creating a number of worries. Clearly, the Federal Reserve has said that it's something that's weighing on their minds. And for all of us, leading up into Christmas, when normally we would expect a number of seasonal hires, we're hoping that maybe, that some of that was in the November numbers, but you would expect that might also lead to greater consumer confidence and people feeling stronger. But right now, the general sentiment of the economy seems to be not great.
On there live with economist Kevin KLOWDEN at the Milken Institute. You would think also that there would be a hiring boom at this stage of the recovery here in Southern California with the rebuilding effort that's still needed here with all the homes and businesses destroyed. Zero in on what's happening locally. How's the job picture here in the Los Angeles area?
Well, the job picture in Southern California is not looking nearly as strong as it probably should, in part because of the fact that even with hiring for construction, there is a very real sense that even in the places where people have been able to push forward in the Palisades and Altadena, that it's not nearly robust enough yet. There are a lot of people who are still unable to get either the reimbursement from insurance or get the clearance to actually build in their properties. And there's also the additional issue going on that the allowances that have been paid to a number of people displaced or fired for housing are on the verge of expiring. And so that's creating additional pressures. The other thing that also is important in this is that the biggest single economic driver in Southern California is still trade and logistics and the flow of goods in and out of the ports. And when people are not spending as much, when the country isn't buying as much, when we're still seeing a lot of skepticism in terms of purchases, not the high end, but more at the in the lower and middle end of the economy, that's definitely having an effect, keeping jobs from really bouncing back at the rate we would certainly hope to see.
All right, we did hear from the Port of Los Angeles. Looks like a lot of traffic there this year, a record volume, it seems, based on what we heard from Gene Soroka from the Port of L.A. And what about tariffs and the impact? Here we are right in the heart of the holiday season here now. There was a lot of concern that there would be empty store shelves and all that. We'll be speaking to a small business owner who runs a gift shop here very, very shortly. What is your professional assessment of how tariffs have impacted things, and what about the upcoming Supreme Court ruling on whether the tariffs are in fact legal and the different possibilities if the ruling goes one way or the other?
Well, the first thing is just to remember, just going back to the ports and what Gene Soroka is saying, is that we saw a huge amount of purchasing that was going on in terms of bulk goods and everything like that in a couple different waves earlier in the year. First, to get ahead of the initial imposition of the tariffs, and then when the president did a pause on tariffs for the sake of negotiations. So this hasn't been even. But the good news is, in some respects, is that for a number of shops, there hasn't been the breakdown in supply. People are still able to get the goods into stores. The problem is, when you talk about tariffs, is it's not just tariffs, it's that inflation has continued to go up. It was down to 2.5% early in President Trump's when he took over, but it's been creeping back up to 3% again. And there's that pressure going on in terms of even if the goods are there, whether or not people are willing to buy them. And that is a real question. The good news for the ports is that a lot of the bulk goods that we need are still there, but we're seeing more of a surge and then lull rather than just a robust growth, especially compared to the way things were even a few years ago. In terms of tariffs, well, if the Supreme Court rules that the current tariffs, as they're imposed, are not legal, the government, Secretary Lutnick, a number of others, and Secretary Bessent, have said that there are other mechanisms in place for putting tariffs in. So don't expect that even if there is that relief, it's not like this money necessarily goes back to the consumers. It's a situation where the companies might hold on to that money because they're the ones who paid it, and they, even if they raise consumer prices, and they will need to adjust if the next wave of tariffs that the administration has promised will then get implemented if the Supreme Court decides that the current ones are not constitutional.
A lot riding on that decision, and we'll keep an open line to you once we finally get that ruling. Kevin KLOWDEN, thank you very much. As always, wish we had more time here, but thank you very much for taking all the big questions here. That is prominent Milken Institute economist Kevin KLOWDEN, executive director at Milken Institute Finance, based in Santa Monica. We wish you and your family and your whole team there all the best for the holidays, Kevin, and thank you very much for joining us live here this afternoon.
My pleasure, and best holidays early to everyone.
U.S. soccer. Reality says the odds are stacked against us. To think that our U.S. men's national team can ever raise the world's biggest trophy. But refusing to accept reality is kind of our thing. We chase greatness. We chase legacy. We never chase reality. Join U.S. Soccer Insiders today. Be part of the journey.
The United States Soccer Federation presents the U.S. Soccer Podcast.
A chance to show people a little bit behind the curtain. Kling, what are we in for?
Such a fun time. So much energy, and you get to actually see people react to the storytelling.
We cover a wide range of topics.
The whole reason we started was we loved playing when we were kids.
I mean, I still got that spark in me.
There you go. But I don't know how you can leave not being a bigger fan.
The U.S. Soccer Podcast. Goals for goals! Follow and listen on your favorite platform.
Mottek On Money continues here, 790 KABC. We did get new readings on jobs today and new concerns about the economy with the unemployment rate ticking unexpectedly higher. And how are tariffs impacting Main Street this holiday season? Businesses and consumers. What have tariffs done to what's on the shelves this holiday season and how they're priced? Let's find out what's really going on out there now. Joining us live is Tara RICEBERG, owner of the Tesoro Gift Shop in Beverly Hills. Tara, thank you very much for coming back to the line this afternoon.
Hey, Frank, thank you so much. Oh, my goodness. Can I just jump in and start at how crazy the season has been?
You've kept us well informed this whole year about how tariffs have unfolded and the impact. So here we are, boom, the holiday season. It is. Yes, please tell us what's happening.
Okay, well, let's just start with this morning. So I'm tracking my package from Italy. It's soaps and candles. It's stuck in customs with DHL. And the report back I got is they don't have the correct paperwork for the international trade in endangered species. I'm sorry, I'm importing soap. I have nothing to do with endangered species. My package has been in customs locked down for a week. It's already December, 16th tomorrow. Or today. How am I going to get my package here? Thousands of dollars stuck in customs, and I have no product in my store to sell. And this whole year, we've been talking about this since April, the struggle to get product in. Every day is a challenge whether or not I'm going to be hit with the tariffs and the customs and the delays. When we had de minimis, I could get product from Europe in 4 days, but because that loophole is gone, it now can take 3 weeks or just be lost altogether. So that is my daily struggle. One of the things that really hits hard at the register is that we are now paying sales tax on the tariff. We're paying taxes on taxes. And then the credit card flight fees are higher because the cost of goods are artificially inflated. There is no break. And what I'm finding is that, my customers have budgets, and I cannot talk them into buying 2 items for $60. They'll just buy the 1 item for $40 because they're not going to overspend their budget. So I'm actually losing sales because I don't have the right price points for people.
On the live with Tara RICEBERG at Tesoro Gift Shop, telling it like it is. And so from at the consumer level, inflation is showing up there. Is that what you're saying? And are these prices being passed along to consumers?
Absolutely, the prices are being passed on. I am doing my best where I can to absorb some of the tariffs, but quite honestly, my margin exists so I can pay my employees and I can pay insurance and all the operating costs. So I really don't have too much leeway to pass the savings on. I need the money to run my business. So that's been a problem. But things that we're not talking about, the human side of this. Like I just heard from a vendor from a store in Atlanta. He's a guitar shop. His entry-level guitars are $300. So a 10-year-old who has an interest in music, $300 to get that kid into a guitar. But now with the tariffs, it's $350. So that is just a line too far for parents to buy the guitar. So now no guitars are being sold and no lessons are being booked. The fact that we're going to lose the arts because people can't access instruments, and the argument that we're going to make them in America, a handmade guitar is $1,100, and we don't even grow mahogany wood. We still have to import the raw material. So that has been a major challenge for retail this year, not getting the raw materials in. I had a vendor, I placed an order in August, expecting a 3-week delivery. The goods did not arrive until October. Unfortunately, I ordered for a stock level for August and not for a December stock level. So both the vendor and myself are out another order or a second reorder. It's just lost revenue. We cannot get the product. We're not making the sales. And all I see on social media amongst my small business retail stores, everybody's under threat of closing. And loss of stores is loss of jobs. And it's terrifying that the tariffs have hit every business. My neighbor next door at the restaurant is impacted by his supply chain as well. I can keep talking. Jump in. Cut me off.
No, you're doing a great job there and laying it on, telling it like it is. I know you're active with the Beverly Hills Chamber of Commerce, and thanks for sharing what the others are saying as well. Any other insights here on how people are going to get through this? What sounds like a tough time here with all this uncertainty, and at any minute now the Supreme Court's supposed to rule on whether the tariffs are even legal, and that'll be interesting to see how what happens if it goes one way or the other.
Well, I think for the big box and for the people who are importing goods into this country, that's going to move the needle for them. But as a small business, all is lost for me. I'm never going to make up my sales this year. I cannot plan. I have no idea what things are going to cost in January. I don't know if my vendors are going to have stock. Nobody is bringing new product to market because nobody knows what the cost of manufacturing and importing truly is. And then no one's even talking about all the abandoned product at the port, because when the product rolls in and the companies don't have the money to pay the tariff on their goods, they're just abandoning their shipments at the port.
Wow, that is something we haven't heard.
Oh, yeah. So there is not, the tariffs have impacted every level. Also, when you think about this, products not coming in, UPS isn't delivering. So all the shipping companies are down. They're down in their staffing. They're down in their deliveries because nobody has product to send. They should have been, 3 shipments should have come into my store of kitchen towels this year, and I only got 1. So the ripples are everywhere, and I don't want to seem at Christmas time the doom, but heads up, everybody, small stores are going to be closing. People are going to be, the unemployment rate is going to skyrocket. And we talk about stagnation. We talk about, the country going into a depression. I think it's here. There's no way small business can sustain the tariffs.
Tara, I'm sorry, but we wish you all the best this holiday season. Hope you get those candles at least. Figure out where those, what happened to them. And we wish you all the best this holiday season, and hope the holiday ultimately is filled with joy for you and your family and everyone there in Beverly Hills. Tara RICEBERG, owner of Tesoro Gift Shop in Beverly Hills, and Santa's helpers there. Thank you very, very much for joining us live here on Mottek On Money on 790 KBC. Stay tuned now for the 790 KBC News Blitz, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money, 790 KBC, Los Angeles, California.
The United States Soccer Federation presents the U.S. Soccer Podcast.
A chance to show people a little bit behind the curtain. Kling, what are we in for?
Such a fun time, so much energy, and you get to actually see people react to the storytelling.
We cover a wide range of topics.
The whole reason we started was we loved playing when we were kids.
I mean, I still got that spark in me.
There you go. But I don't know how you can leave not being a bigger fan.
The U.S. Soccer Podcast. Follow and listen on your favorite platform.